could be your sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm just going to be going over my usual updates, so let's just go ahead and get it started here. For this monthly chart I've been going over a lot and stressing a lot recently. I just wanted to quickly update this RSI down here. I've been pointing out how we were finally starting to inch above this horizontal trend line on the 52 point. Clearly, let's go back here and see how it has been very important once we pass this point after reaching and getting within this general low range here on the RSI. We have come back below it. I think at this point, as long as we don't significantly lose around 42, 45, just in general, this one, golden pocket, this 0.618 zone right here, nothing really too much to worry about. Although, I mean, it is the RSI, so I mean, it's not that big of a deal. I mean, in general, I think it's just going to correlate with a move down and around, which I believe we're starting to see the early signs of that around 25, 24, 23,000. Like I said recently, worst case scenario, we'll actually see perhaps some wicks down, or more so, maybe even more, getting the candles actually close around 20,000. As long as we, I think, is just hold 20,000, I really don't think there's too much to worry about overall. What I do think is a big deal though is that this MACD right here does not get significantly entrenched back below our 0 point. If that starts to happen, I do not think that's going to be good at all. I think there's a possibility. I mean, I definitely don't think we'll flip pink, as that means that, I mean, we'll have to get around halfway down through this band, even getting back below around this lower purple line right here. But overall, I mean, that's not really too big of a deal in my opinion. What I wanted to add on top of that monthly chart, higher time frames, is this that I come across just in my daily looking into just information and gathering, etc. This right here, the net unrealized profit / loss. If we just take a look here, going all the way back to 2012, you can see each time that this blue, so the NUPL reaches its lows, 2012, 14, 15, 18, 19, and our current 2022 absolute low. You can see each time pretty clearly denoted. It is marked at the bottom of the bear market each and every single time. Outside of that, here on this 2 weekly chart, what I want to update is, so we fixate here on our black dotted trend line range right here, going all the way back to the tail end of 2017, the previous cycle, very end of that cycle's final bull market. If we zoom in here, what we can see here is right here, obviously it was very important. This is kind of where we buffered, consolidated before we finally got rejected right here. Entered the second half of the 2018-19 bear market. This is where we continued to bump our heads right here until we went into the March crash, and then we made this general overall, this massive W pattern right here, which then led into our current double top, into our current bear market. As I've been saying, we've broken out of 16-month resistance, and we're now literally been pretty much trading sideways right smack in the middle of our estimated moving average band. And this is lining up these black dotted trend lines, this range lining up with 20,000. Likely, if we were to see that, as I said, probably some wicks down to this area, or I mean, we could completely come down, have the closing of a candle, perhaps, you know, 1 or 2. I think that this move towards the downside is going to be rather quick. Like I mentioned in the previous video, I believe we're essentially about either we're right here in this bubble, or what we're going to see is we're going to come down once more. We'll move up. We'll have one more tiny movement towards no higher than around like 43, 45,000 in this general area. We'll come back down once more, maybe around 32, 35,000. And then we'll finally go up towards the next bull market. But what I think is most likely is that we are, again, we're, as it's denoted on here with the arrows and the blue bubbles. Previously, back here, if we take a measurement, we can see that we came down 21.23%. If we do that same thing again, that puts us at around just 24.2, 24.5 thousand. Again, I think it's completely likely that we will go down lower than that in general. Let's see if it's going to let me do it today. Oh, it will on this chart. In general, I mean, just this area right here, I mean, this is massive support we could find, as we saw right here. I mean, we got rejected right here, and we got not necessarily rejected, but I mean, we consolidated within those two areas that I just drew circles around. And then it's also generally kind of just lining up. It's a little bit lower. It goes down pretty much right down to around 20,000, 19.8, but also just ascending, this long-term ascending blue support range that I've had drawn in here for quite some time. And also what I do find interesting is that, let's say, I personally think that this move towards the downside is going to be rather quick. It'll be something along these lines. So, I mean, no more than, I mean, if we're beginning this downside, it's going to take about a month. Perhaps, you know, something that's like, you know, it sounds rather long, but I mean, in the grand scheme of things, it's not necessarily that long of a move, at least in my opinion. And right here, if we just take a look at our yellow trend lines right here, so denoting what we've been in, we've broken out of now, the falling wedge pattern. I mean, it's roughly lining up with about the end of May, around first 2 weeks of June. If we do indeed see this move down 23, 24, 25 at the highest thousand, perhaps down to at lowest 20,000, likely I think we'll start to hit those, whatever the price target ends up being, towards the end of this month, about the first 2 weeks of June. And then from there, what I think, as I was talking about just a few moments ago, is most likely this is basically, as I said in my previous video, I personally believe that we're seeing the final pit stop before, as this fractal pattern here denotes, we ultimately move back up towards the upside. I want to touch back on this chart. It's been somewhat, I don't really remember how long it's been, but it's been a decent while since I've gone over this chart. This is the 2-weekly chart. As denoted, each of these white vertical trend lines, these ranges represent the halvings, with the dead center of these right here being where the actual halving occurred. So essentially, if you start from the halving, just as a range, 70 to 80 bars, the bull market typically takes place for right here, leading into the final phase of the second cycle. 77 bars, as you can see down here. For this one right here was 72. For our current one, it was 71. And then if we go down lower, what we see here, first 195, second one 101. The difference between those was 6, so I decided 6, so we have 107 right here. Last time I went over it, like I said, I mean, at earliest we could see the halving. I don't personally believe that I think we're going to see a major shift in the way that the halvings occur with respect to the price movement over time. Clearly, as it's denoted on here, each and every single time the halvings have roughly lined up with the overall bottom, or at least just kind of early on into the bull market. I think we're gonna see things switch up this time around. If we do indeed see this white to black pattern. So as I mentioned last time when I was straight, each of these patterns right here, these are basically the 4. Realistically, there's only 2. But these are really the only pathways that I could possibly see it going. The green one goes all the way back to the 15 to 17. The pink one is from 18, 19 to our most recent double top, and then the black and the white pattern is from March crash to our double top, which is what I believe is most likely. It's what lines up with my whole phase cycle system, etc. Most of you are likely already aware of that. If you're new to the content, I'll have the cards linked at the beginning of the video. The first video of those mini cards will have me going over that in depth if you are interested in seeing me elaborate more on that. Again, we can see right here is clearly denoted with the 11 bars, 22 bars, seeing very similar kind of just fluctuation movement of price over a given period of time. We can see right here I have it denoted. It's just an entangling of a bunch of estimated moving averages. We see that happen. Eventually the bear market low sets in and we pretty clearly start to reverse towards the upside. But I think this time around, and this is if this white to black pattern, what I think is more likely to happen, plays out, where the upcoming halving is going to line up with the top, or in general just the topping range that we'll set from anywhere. I think worst case scenario heads to around like 150, 175,000, but I think what is more likely personally is 200 to 300,000. Let's say we do, to give an update on this, let's say we take the green path for whatever reason, and just to kind of give them some reasoning behind that, as you can clearly see, as I've pointed out many times, if you just kind of fixate on this area right here, you can see how it looks nearly identical to this area right here. You can see the white goes below the green right here. We see the red moving average, or estimated moving averages these are. Then we see the yellow go below the green, and the moving estimated moving average band. I mean, it looks quite literally, like I said, it's identical. So I mean, that could be, perhaps some evidence that maybe we're going to take this green path, and if so, then that would start to push 1 million by around halfway into this decade, so around 2025. I personally, the reason why I don't see that as likely, because I think if Bitcoin hits, I do think Bitcoin will hit 1 million, but I think if it does, it's going to be more towards the end of this decade, pushing like 2030, 2031, 2032, etc. If we take the pink path, that's going to push us more towards 300,000, but just at a later date. I think that this pink path is the least likely. I think what is most likely, like I said, black, white, and then after that, I would say the green. Realistically, personally, I'm not even entertaining the pink, but I just have it on here just to, I mean, there's a realistically, if you go back and you look at price history, I didn't include 2011 to 2013 because that's just way back in the overall history of Bitcoin and its phase cycling system, so I just don't see any good reason for that to occur whatsoever. Also, I forgot to go over it earlier on the monthly chart, but if we look at our fear and greed index, I mean, where it's borderline at 50. 49 specifically is about as neutral as you can possibly get, which I believe just kind of further strengthens, I mean, the general fact that, I mean, I feel like everybody's kind of, clinching right now, if you get my drift. Some people, I'm sure, with the fact that we've been consolidating sideways like we have, they're like, oh no, it's just going to dump back down to 10K like a lot of people still think it's going to happen. I think that's completely irrational, but, I mean, at the end of the day, there's always going to be people out there like that. But the reason why I wanted to update that whole halving idea that I've gone over for months on end at this point was because I came across this. So this is just another tweet. So this person, Bit Harrington, sees, or is just kind of playing out the general what we've seen trend so far. So you can clearly see here 1 year before bottom, 1 year before bottom, bottom, bottom. That's so right now we're at the 1 year before. The halving is going to likely happen. Estimations are putting it out towards, if we just go ahead and go back to this chart, more likely around like April, May, June of 2024, at earliest very beginning of next year. But more likely it's going to happen around April, May, June of 2024. But we just go back to this. That would put the top, I mean, obviously you can clearly see a pretty good distance after we see the halving, which would, let's say that this trend of the halvings continues to stay the same, then that would start to further affirm either the green or the pink pattern. But again, I personally think we're going to see a switch in the way that the halving trends are going to continue to carry out. I believe that what we're going to see is some sort of a doubling sequence within, like, for example, we're heading into this next halving, which is going to kind of mark some sort of a change in the trend, and we're going to start to see some of the halvings are going to line up with tops now, then some of them will line up with bottoms, and then there's going to be certain, in terms of the mathematical doubling sequence, there's going to be gaps here and there that, just adhere to that mathematical sequence. I'm not going to get too in depth on that in this video, but that's just the general consensus. Again, I just want to go ahead and quickly update this chart, especially if anybody new is watching, just because I feel like this is a very important chart. Again, you can see with our bubbles right here, this is, I feel like, the strongest. At the end of the day, this is just estimated moving averages. I mean, general just moving averages, which aren't necessarily the most reliable. This is the 2-weekly chart, but I mean, this is what happened recently with the entangling of the 50 MA and the 50 MA, two important moving averages, estimated moving averages, etc. I mean, this the last time this happened was in November of 2015, right as the bull market was beginning into 20,000 approximately at the end of 2017, beginning of 2018. So, I mean, again, on top of that monthly chart I've been going over recently, it's just also really important to see as well. So I wanted to go over this right here. So again, this is the 2-weekly chart. As I mentioned, going back to this monthly chart on here on this RSI, we're probably going to see a dip down here. So to correlate that with this chart, there's more of a kind of a pattern you can point out on here. See if I can't draw on this chart. So what I want to point out here is likely what I think we'll see is a return back down to this general area right around in here. So around like roughly like 49, 50, 55 or so, just in this general area. I mean, we'll see a return back down around 0.618. I mean, you can kind of clearly see that's the trend after we exit this low range right here. So if we go all the way back to 2011, 2012, we come up, you can see we had a return back down right here. We had this major return right here, this is what lined up with hello? Why is it this? There we go. You can see this is what lined up, this most major return right here, just lined up with the major retracement right here, which this again right here, just to reiterate, around June, July 2013, this is what lines up with what we've seen from roughly the May 2021 64,000 all the way down to our current absolute lowest low of December 2022. Again, just has to do with the lengthening of the phases and the cycles that I'm talking about. Like I said, I'll have the card at the beginning of the video if you're interested in that and you're new to the content. But just to go and further point out this trend, we can see here, now again, like I pointed out right here, we had that major return. We had made our double top going back up to right here, and then we entered bear market. See the same trend continue to carry out right here. We come back up, you can see we kind of just consolidate in this general area, come back down, did that right here. It didn't really kind of happen as elegantly as it did during this W, so this phase 1 of the cycle 3 that we're on. But we can see more clearly, so if we go starting at the March crash right here, really kind of when the bull market began, from the bottom of 2019, February 2019 to July 2019, when we hit around 14,000 again. That was realistically more so just a relief rally, if anything. That is what lines up with if we go back to November, December 2011 to January 2012 back in this area. But what we can see here is if we go to the March crash, you can see how and this is again, so this is what lines up with what we're seeing right now. We come up right here, this 0.618, come back up to the 786, we come back down to the 0.618. So that's essentially what we're seeing right here. We came up, roughly met this 0.618 area, we've come up to the 786, so likely, because everything, the data-wise, is really pointing to the fact that we're entering, like I said, I mean, very least relief rally, most likely, in my opinion, according to everything, full-on bull market. So I think it'll be constructive to see us return back to this general area that I pointed out right here along this 0.618, which will line up with us going back down to 23, 24, 25,000, worst case scenario, 20,000. So again here, so for this 2-day chart, I've been going over a lot recently. Just to further point it out, you can see we're still starting to dip off here. I mean, we did get a bearish divergence. Let's see if I can draw on this chart. I'm still having issues. I upgraded my TradingView subscription, and I don't know, I think they recently just added this, but I have over 20 tabs opened up on TradingView. Can't see them because I have it cut out of my OBS recording, but I'm only allowed 20 and I have like 24, so it's making me I can't draw on half these charts, which pisses me off, but it is what it is. But anyways, we've been seeing, if we look right here, we obviously have an ascending, we have a positive support. Right here we can see we have a negative, or my bad, not support, resistance, positive on the price, negative support, or my bad again, resistance on the RSI. So I mean, I definitely think we are clearly due for more. It's definitely not necessary, but I think it's pretty clear that we're probably going to see something similar to how we did going all the way back to around end of February, about halfway into February, leading into around the 10th, 12th of March. So this drop we saw right here when we retraced back to this 800 estimated moving average right here. So I think that's likely what we'll see. It will, in general, again, just line up with this megaphone flag, or just in general megaphone pattern that I've been talking about for quite some time. This chart isn't more elaborately painted out. I mean, I've been going over this a lot recently. Most of you are probably already familiar with this, but this comes down around 22,000. I mean, it's completely possible if we, let's say we come down and we go even lower. I mean, as long as we don't lose 20,000 and we come maybe perhaps down in this general area right in here. I mean, we could even, let's say we do meet this worst case scenario. We come down to 20,000. I mean, let's say, I mean, as long as we, in general, we just don't lose this right here. We don't start to close like 4-hour, 12-hour daily candles below around 19.7. The world's not ending just yet for the price, but I mean, in my opinion, if we start to close below this green dotted trend line right here, which is at 22.2, 22.3, I personally want to start looking at that as a pretty bearish sign. It's not going to be too good if that happens. If I move this down to this lowest wick down here in October 13th, that puts it at 21.7. I mean, again, everything's realistically just, I mean, like I said, just to reiterate, 20,000. I mean, if we start to get significantly entrenched, closing 4-hour candles, etc., below that, then I mean, likely the bear market's not over. Maybe we're going to see, perhaps maybe there's a black swan event coming up. I mean, the whole idea is you can't predict those, but you can at least to some degree say, like, maybe there's a black swan, like black swan event that's going to happen a month from now. Maybe the whole Russia-Ukraine situation gets worse. Maybe China finally invades Taiwan, or perhaps the whole Russia-Ukraine situation moves more towards the Middle East and the Holy Lands, Jerusalem, Israel, etc. I mean, with how things are going in the world, I mean, realistically, anything is viable at this point, in my opinion. I mean, for all we know, I mean, they could launch nukes any day now. I mean, that's how bad things are getting, unfortunately. But we are, as we can see here, let's take out all these drawings. You can see how we're starting to finally, we're dipping a little bit below our 800 estimated moving average. It's not really good to see. We finally got above it right here when we hit 27, 28, 29, 30,000. Right now we have not, we still have about 14 hours left in this daily candle. If we close below this, this is going to further strengthen and move back down to the, like I've said, 24, 23, worst case 20,000. Right now, the 200 estimated moving average is sitting around 24.6 thousand. So especially if we open our next candle, our next daily candle below this 800 EMA, then I personally am going to be seeing that as confirmation that we will, at the very least, dip to $24,000 approximately. You can see we've had many touch points right here. If we go back to around 20th of March to pretty much end of that month, we bounced on it right here, went towards 30,000, came on it, bounced 25th of April. We are also getting, again, it's just that longer term bearish divergence I was pointing out, going all the way back to the highs that we set, or the relative highs we set towards the end of January. We can see down here on our stock RSI that we are entrenched back below the lows. This also, as we can see here, you can see how from up here, we have this kind of double top. You see a double top right here. We come down, we make this double bottom with you can clearly see this kind of M in between it. Then we bounce up. That's roughly essentially what we've done right here. So, I mean, for all intents and purposes, I mean, that is what is lining up right here. We could just as likely continue to see. We haven't fully met the bottom right here. As you can see, we're just ever so slightly above the very lowest low right here. So, I mean, we could continue to obviously come down a little bit lower and just perhaps, I mean, just literally drag along this general area right here as we continue to see this movement towards the downside, as I've been pointing out, towards no lower than 20,000, etc. But once we do meet that, I think that the confirmation that it'll be safe, the things are actually going to break back above 30,000. Obviously, once we just start to go back above 30,000, that's going to be great to see. But realistically, right now, what's going to be important to watch throughout this upcoming bull market on these lower-esque, so the daily time frames, is having price stay above this 800 estimated moving average. That's going to be really important to see in the coming time. Here for the 4-hour chart, forgot exactly what I wanted to go over for here, but if we take a look here at the RSI, again, it's in general on the chart. I've been going over this a lot recently, this chart. We can see here on the RSI, you can see how we are. I can see if I can put a trend line on here. Okay, good, I can. You can see how we are roughly just like in the lowest lows that we've set so far recently. We go ahead and add another one. I mean, just general range down right in here. We are coming and meeting this general area, which is just what, I mean, it lines up with, I mean, we go all the way back to this final double bottom we set right here, which set our absolute low, what is very likely the bear market low. Right here, it lines up with when we retested our 16-month bear market resistance. So it is generally a good thing to see that price is way higher than it was in the past, yet we are still this low on the RSI. That is overall, generally it's a pretty good thing to see. If we zoom in here on the price, you can see this fractal, which I took a fractal from this area right here, which is what I've been likening this upcoming drop to. We can see here that we had this kind of sideways consolidation in alignment with the fractal pattern. Now we're dipping off like the fractal pattern. We are also, as you can see here, getting our pink vector candle. Again, that just lines up with the RSI being oversold. This doesn't mean this is going to be the bottom, and we could continue to print them all the way down to whatever the next upcoming relative low is going to be. You can see right here, we got it right here. We made this kind of double bottom. You can see, again, just to go ahead and point out kind of some harmonic structure and price. We set an M right here as a double bottom, and then we bounce back up for just a tad bit. Obviously, ultimately, in the longer picture here on this 4-hour chart, things are ultimately oriented towards the downside here. But again, just to go ahead and summarize it for Bitcoin, 20,000, like I said, lines up with the overall ascending support going back to what our absolute low is back here. So just to reiterate, if we lose 20,000, that's going to be very, very bad overall for the price of Bitcoin and realistically everything else in the crypto market. Here for the update on Ethereum. Generally, just to go ahead and state it as I usually do, obviously all these altcoins, and I mean that is Ethereum and is our Cardano and everything else altcoin wise that I'm going to go over and have been going over. It's all depending on Bitcoin right now. If Bitcoin continues to stagger down, all these other ones are as well. Some of them I'm sure will probably go up as Bitcoin is going down. That is just the nature of some altcoins are not perfectly correlated with the movement of Bitcoin over any given period of time. But right now, the 800 EMA does sit around 14, or more realistically around 1500, which that lines up with coming back down and seeing a more solid retesting of the 16-month resistance, this purple dotted line. We had a rough test right here of it. I wouldn't really call that a retest. It was literally right as we broke out. I mean, it's somewhat of a retest of the 60-month resistance, but I wouldn't really see it. I don't personally see it as a really solid, viable retest. So, I mean, I think it's completely viable that we kind of come down to this general area right in here. I mean, maybe we wick below it. Maybe we even get some candles to close back below the 60-month resistance, going no lower right now. I think Ethereum to look out for is around 1400, especially just in general worst case scenario that we don't lose this pink box right here. That would essentially just line up with Bitcoin losing 20,000. Here for Cardano, essentially the same thing. You can see we're coming down right here, and we are testing the ascending support that we've made. Started back here at our bear market low for Cardano at 23, roughly 24 cents. We're meeting our first box to hopefully find support. Now, let's say Bitcoin does continue. I mean, Bitcoin is at, I forget, around 20, specifically 26,494 right now. Let's say Bitcoin does go down to 23, 20,000. I mean, I think we could see, I mean, even Ethereum, I think we could actually perhaps, I mean, we could see it come down to this pink box. Maybe even, I mean, maybe even lower. Maybe we would completely outright retest the lowest lows again. I mean, that would honestly be a kind of a perfect storm for the whole market maker way that people, tend to see the market, as a kind of a final flush out, a final scare tactic, if you will, to get, the smaller fish out for like the whales and whatnot to buy in. I would say for Cardano, I mean, losing 28 cents is realistically Bitcoin's losing 20,000. That would also, I mean, if we did do that, it would come back down, and we can see down here, we would retest essentially this area right here. So our absolute low that we set, like I said, around 23, 24 cents. We can see right here the estimated 200 estimated moving average, 800 EMA. Those are getting close right here. Those are going to be important to break back above, which in general is just kind of lining up with the overall area right here. Again, this lines up with essentially 50 cents. Right now, 50 cents is good for Cardano. We'll be looking for Ethereum. Could likely get caught for a little bit around 25 to 3,500. Once it breaks that, I think it's probably going to be a straight upward shot, similar to when Bitcoin finally breaks around like 40 to 45,000. Here for the stock market indices, here we have the SPX. We're continuing to go sideways here, similar to the cryptocurrency market right now. We are not here. I mean, if we count this wick right here, we're seeing a very subtle bearish divergence. It's nothing major, nothing really to consider right now, in my opinion. We are also, I mean, depending upon if you count the wicks, I don't look at the wicks when I'm looking at bearish or bullish or just divergences in general. I kind of more so want to stick to where the candles close, the bodies of the candles. But I mean, especially on the other indices, they're actually seeing more clear bearish divergences. But I mean, I think ultimately we're going to get rejected here, like I've been going over recently. I think we're heading into the next iteration of the 2008 market crash. The housing market is also kind of already started to go down, and that's, I mean, globally we're seeing very similar, and not even really similar. I mean, it's obviously similar, but it's even worse economic, financial climate than we did back in 2008, because blockchain wasn't even really around. I mean, to a degree it was, kind of the whole, obviously Bitcoin came out in 2009. It came out shortly after the 2008 crash, but the whole idea was, I find it also interesting going back to and thinking about that, is how I don't think it was really any coincidence that Bitcoin was officially released nearly in unison with the 2008 crash. Obviously it was about a year and a half after or so, but I mean, and the whole fact that we have no idea who made Bitcoin. I mean, I personally, as I've stated on this channel multiple times, I mean, I think Bitcoin is a Trojan horse. Ultimately, I think it was put out by whomever. I think it was put out by, I believe, a group of people, a specific person. If you've ever looked into John McAfee, he's dead now. It seems like the government had him killed, but that's another story that I don't have time to get into right now because it's a tangent I don't want to get off on. But he, whether or not you want to believe him, he was kind of I mean, I'm sure some people would consider him a crackpot. He was a very interesting guy nonetheless. He was a character. But anyways, one of the videos I watched in him a while ago, he ran the Bitcoin white paper through a forget what specifically he said. He did some sort of just like proofreading thing. He ran it through some sort of software that linked it and matched it up to other people's written papers, and he basically came to the conclusion that it was this. He didn't name the person. He came to the conclusion that it was this person who wrote the white paper because of the vast similarities between the way that the literary structure in terms of the way that the white paper was written, and it linked it to a bunch of other papers that this person, whom is still remain is unnamed, wrote. But it was a group of people in my researches that worked on Bitcoin and kind of really put it out there. And again, like I said, I think it's a Trojan horse to get people just into blockchain, addicted to it, because it can make you a lot of money in a short period of time compared to things like precious metals and stock market indices. And I think ultimately it's part of it is meant to delude especially naive people into accepting like central banking digital currencies and kind of just further strengthening the tyranny that can be brought upon society when it comes to finances, economics, just money in general. Especially like, for example, like they want to push cars into electric vehicles. Like if everything becomes like highly electrical based, and then you can obviously connect those things to the blockchain. So for example, like I said, a car. Every single car, if they end up banning gas cars for whatever reason, and every car is electric, like a Tesla or whatever, and if that car is connected to the blockchain, like for example, and also the CBDCs, let's say that you bringing in the whole climate change agenda. Let's say that you had too much carbon emissions this week or this month or in whatever allotment period of time. Or let's say that you tweeted the wrong thing last week or whatever, and the government doesn't like your carbon emissions. The government doesn't like your tweets. They can just, because it's connected to the blockchain, they can just turn your car off. You can't use your car. You go into the grocery store this week and you can't buy anything because they didn't like your tweets last week, or you put, like I said, you emitted too much carbon. But anyways, to get back to the analysis here, so for the New York Stock Exchange, you can see right here, if we go ahead and zoom in on this pattern right here, looks like a megaphone. I don't think it's going to end up acting bullishly like these patterns typically do, but we can see here, this isn't the one that really has the significant bullish, or my bad, the bearish divergence, but we can see right here that we have closed 3 candles below the median for the megaphone pattern. It's likely, in my opinion, going to be playing out bearish. So as soon as we start to close below this white box, I think that's really going to be full on confirmation that we're going to continue to go towards the downside here. Like I said, I mean, I think it's going to be similar to 2008 crash. So I mean, detrimental for the overall stock market. So here's the NASDAQ. This is where we're really seeing this bearish divergence. You can see here, take a look at the RSI, you can see overall going all the way back to February of this year, around the 3rd of February. You can see we have this is for the resistance, it's a negative slope. If we take a look here at the price, going all the way again back to March, well, yeah, I mean, going all the way January, February, you can see right here, we are seeing a positive resistance. You can also look at this as a rising wedge pattern right here. So we're coming up, we're consolidating, and then I think we're going to get rejected down here. We'll probably, get entangled for a little bit, and then we'll come down here. We'll just continue to ultimately fall down, in my opinion. Again, I mean, just to reiterate, there's been plenty of news articles within this year. Yeah, I think even perhaps going back to the tail end of last year, saying that, I mean, we're likely going to experience. I mean, we're already in a recession. The plenty of like the Russian, I think it's the ruble. I mean, plenty of fiat currencies are dying, have already died. The U.S. dollar is getting more and more worthless as each day goes by. So here's gold. Here's an update for gold. This also I feel like looks similar to this NASDAQ. I mentioned this, that rising triangle, or that rising wedge. It's typically a bearish pattern. As I say, I think any pattern is really just 50-50. I think any pattern has equal likelihood to break towards the upside or the downside, but obviously if you analyze them, some of them obviously will portray and show a disproportionate likelihood towards upside or downside, but I think it's just healthy to look at it as 50-50 until it finally shows confirmation. But I mean, you could look at this as a let me go down on the time frame a little bit. Let's go to that. Didn't do anything at all. Go to the 2 daily. You can kind of see this. It's a little bit more prominent, this rising triangle that we're seeing. I mean, and we're hitting a approximately 3-year resistance, going all the way back to 2020, around halfway into 2020. Again, I think we're just seeing, what we're seeing here is a rising wedge. We are seeing consolidation. So move into it. Now we're consolidating. I believe we're going to break towards the downside. We are also seeing continued bearish divergence. You can see negative resistance. We've had positive resistance up here. I mean, that's just not good to see whatsoever overall. I mean, as I said in one of my previous videos, I don't remember which one it was, I personally see no value whatsoever in precious metals. There's really no use case for them outside of the fact of them being used for like jewelry and like electrical parts, components, and realistic. I mean, gold's really not used often for, you know, the electrical parts purposes, but I mean, especially like jewelry, for example. I mean, that to me, that just makes something like drastically less value. I mean, that's just my opinion, but overall, I do think we're going to continue to see gold go down here. I mean, at the very least, we'll come down and we'll retest this zone right here on 1500, and then maybe we'll get back a bounce, and then maybe we'll get rejected again. Maybe we'll bounce from here, do something like this, and then we'll finally break out towards the upside. I mean, like I said, ultimately, I think it's just going to go down. I feel like because of the overall adoption of blockchain, the fact that they're pretty much intentionally killing fiat currencies. I mean, realistically, if you really take a deep dive into everything that's going on in the world right now, that's kind of just what everything is really alluding to. There's really no reason for gold to be a genuine part of the next evolution of finances, economics, literally society as a whole. I mean, blockchain literally not only does it have the potential, but it quite literally does have the ability to revolutionize literally every sector of human life. I mean, from all the way from the banking sector, the housing markets, I mean, enterprises, hospitals, medical systems, data being stored on blockchains there, all the way down to the smallest things is just, I mean, like your daily and peer-to-peer interactions. Like, I mean, obviously, you know, sending somebody Bitcoin through the Lightning Network, or like Ethereum on the Raiden network. I mean, like XYO, for example, that I talk about a lot on this channel. I mean, with the whole revolutionizing GPS location services. I mean, the list is literally very long of what this technology can do. And a lot of people don't really understand that, which is, I mean, obviously why it's not fully adopted at this point. But here for silver, we are in a 12-year, we're meeting a 12-year resistance. So obviously this is going back to around 2010. Just approximately 2010, 2011. We've still been bumping our heads on this same support. As I mentioned, I'm not going to zoom out, but I mean, macro-wise, I realistically, I feel like you only can see a massive cup and handle. But like I said, I mean, like gold really looks like it's going to go down. If gold's going to go down, I don't see why silver would continue to go up. Silver, I would say, has more use case when it comes to, obviously, there's the jewelry aspect of that. Like I said, I personally think that makes something less valuable because that jewelry's literally pointless. It's cool, but it's pointless. Silver is the best semiconducting material, or maybe it's I mean, it's essentially the same thing. But I mean, when it comes to electrical parts, silver is a very good conductor of electricity in general. So I mean, But I mean, I personally feel like that is also, I mean, that's whether it's jewelry or electrical components. I mean, you're going to take this precious metal and you're going to form it into a viable good, which to me just degrades the value of something. And again, with the whole like massive technological evolution, I don't see why precious metals would be a part of this to any degree. And also, if you think about the further the tyranny that the like CBDCs that blockchain in general could bring, I feel like precious metals is like nearly diametrically opposed to tyranny because I mean it's a straight up hard asset. I mean you could, I suppose to a degree, say that about Bitcoin. I mean I suppose that's why Bitcoin has the name digital gold. I mean obviously they're similar, but there's a massive difference between the two at the end of the day. I mean nobody wants to carry around a bunch of gold with them. It's just really inconvenient. I mean, at the end of the day, like I mentioned in previous videos on this channel, I think whatever survives the general stock market and the upcoming crash, and I believe is most likely, everything eventually, depending upon how much more longer the world's here, society in general, if war doesn't literally nuke everything within the next number of years, everything I believe is going to be transferred over, transitioned over, integrated into cryptographic placeholders, whether it's a utility, whether it's a security, whether it's a utility. I mean, and I'm sure there's use cases of cryptographic placeholders and blockchain solutions that really, I mean, haven't even hit the scene yet. I mean, there's still plenty to figure out about this technology, I believe. But so this is the weekly chart for silver. Seeing a bearish divergence here, you can see negative slope resistance for silver on the RSI. You can see we have a positive up here. So obviously that's not good to be seeing. I mean, again, like I said, this is the weekly chart. This goes all the way back to the very beginning of this year, tail end of last year. So I mean, we're essentially seeing around just approximately 4 or 5, 6 month long bearish divergence forming here. To go back to gold, once we start to close, open, etc. here on this weekly chart up below around 1,960.50, in general 1,900, that's likely going to be confirmation towards the downside. For silver, I'd say the first milestone to look out for is around 24, going below 24, closing below, etc. Like I said, for gold, going below 24, and then worst or after that around $22, $21. So here for the altcoins, XYO, we're just continuing to bleed here. Like I said in my previous videos, general consensus for the altcoins, if any of you are just kind of, clenching right now, you're scared, your teeth are chattering, just zoom out. I mean, overall, yeah, we've been bleeding towards the downside since going all the way back to, at least for XYO, since the very beginning of this year when we broke out of this approximately 16-month falling triangle falling wedge pattern. Nonetheless, I mean, it still looks good. I mean, all things considered, we're nothing really too important to point out on the derivative indicators. So let's say that Bitcoin, sees this short-term dump to 24, 23, worst case scenario 20,000. I mean, I think that could in all likelihood warrant a complete retest of the previous lows down to 0.0027. I mean we could even go lower than that. I mean we could go down to around 0.002 on the dot, maybe even around 0.015. And if we do that, I think it's more likely the RSI will actually just continue to go lower and there won't be any significant bullish divergence. Although, let's say the price does end up going that low, it does go lower than our previous low, what I mentioned, and the RSI goes up. And we're going to see there a bullish divergence. I think that will just overall be a great thing to see there. Like I said, XYO, I feel like personally is a great project. Like I said, it's going to has very good potential to. They're partnered with FedEx, Microsoft, and a bunch of good things. So I mean, And revolutionizing the GPS location services is I think a very good thing at the end of the day. But wherever we get our bounce here, like I said, I think around a penny and a half to 2.5 pennies is probably where. I mean, we could blow straight through that, but if we do kind of get a pit stop again towards the upside before this thing finally goes berserk, then that's probably likely the area. I mean, we could also consolidate it from around 3 to, I mean, up to 8 cents at its previous high as well. But outside of that, here for the Bitcoin chart, here I have this on the higher time frame on the weekly chart. So again, this is pointing out, we can see here we have this very elegant, this nice bullish falling wedge, falling triangle pattern. We have started to enter a purple box that I've had drawn in here for many months at this point. We are getting, as you can see here, we've been getting a bullish divergence going all on XYO, this Bitcoin chart going all the way back to June of last year. You can clearly see with this green highlight that I have on here, what we have formed here is a type of a double bottom, which would be strictly adherent to the falling wedge triangle pattern that we're seeing here, which would be, can I draw on here? I can. So basically what we're seeing here is that we're just seeing a, like I said, I mean a type of double bottom pattern that I pointed out here many times, but again, like I said, this is just adhering to the way that a falling wedge has to oscillate in its price over time. But I mean, like I said, we're getting good bullish divergence. Even if we, dip below this trend line right here and maybe even go lower than we have back here in this area, I don't think that's going to be super detrimental overall for the price in the long run. I mean, like I said, I believe personally, again, channel's not meant for my financial advice, just going over my own opinions, but I mean, I personally believe that we are heading into the final best moments to make some good buy-ins at prices that are very likely never going to be seen ever again. Last thing I wanted to point out is these mini ascending trend lines that I have on here. These are all the same trend line in terms of the orientation of its slope. It's cloned a bunch of them. I believe the one that I used was this one right here, so I'll change the color of it so you can point it out more clearly. But this red one right here, which just, you can see this general, the slope of the way we had this consolidation right here to right here, you can see how that's ascending slope over time. And generally, let's go ahead and highlight it, it's pretty much just lining up with this right here. So this general slope and price action over, I mean, a period of September, so around 2 years, just roughly 2 years, maybe 2.5 years or so. This is the slope that's been forming for that period of time. This is what these blue trend lines are as well, which you can see clearly. This further kind of confirms a move up to 0.00004 zeros and a 4 for Bitcoin. Last time I went over it, I think a conservative price target for XYO is $2 to $3. A median would be $6, and then I think best case scenario it goes to $14. I do not remember the circulate. I haven't looked at anything circulating supply wise for any of the things I go over in quite some time. I'm not really going to bother to do that right now, but last time I looked, I do know that $14 is not a big deal, especially, obviously this is it. If this tops out relatively in unison with Bitcoin when it's 200 to 300,000, assuming that that projection is correct, that's not really, it's not going to pose any, there's, I think it's about 12 or 14 billion, if I remember correctly, XYO in the circulating supply. So I mean, yeah, that's really not going to pose too much of an issue if it goes to 14. But I mean, 2 to 3, like I said, then $6, $14 is what I see happening. But let's see. Let me go back here. Oh, we've already broken out of the pattern here. And again, I just to point it out, this is the fact that we've on the USD chart we've broken out of our falling wedge. We haven't broken out of the falling wedge on the XYO to Bitcoin, but like I said, we've had a long-term bullish divergence forming here. I mean, even the RSI looks like the price does. We come down, we've made a double bottom, and of the M variation, like I said, it's a double bottom with a small M, making the actual double bottom. I mean, you could look at it as a triple bottom too, because obviously there's 3 bottoms right here, but obviously you get the picture. So I mean, overall, I think it looks good here for Phantom. Coming down, and we're testing a very, very important resistance. Obviously, if Bitcoin continues to go down, we will likely break this. But there's personally, I think it's also just as likely that Phantom continues to go up and Bitcoin goes down. I mean, like I said earlier, I'm sure most of you realize that everything fluctuates together. But I mean, this could just as likely, let's say Bitcoin continues to go down, but let's say as Bitcoin's going down, Phantom goes up and then it gets rejected right here. And then let's say Bitcoin is still going down and Phantom gets rejected right here. I don't really think that's what's going to happen, but then Phantom comes down as Bitcoin finally hits its upcoming relative, its local low. I mean, this is lining up towards the end of May, towards the beginning of June, like I mentioned earlier, for Bitcoin pushing into May, about halfway into June. So, I mean, that could actually be fairly likely that we end up seeing something like that. So we don't break this integral ascending support going all the way back to November of last year. But if we do break that, that's just lining up at around 35 cents. And if we do, that would probably bring us down to around this general rough area right here. You can clearly see lines up right here, right here, right here, and right here. So it's around 23 to 27 cents. Again, just kind of ironic right there. Like I've been saying, Bitcoin going down 20, 23, 24, 20,000. I mean, that's essentially Phantom would go down to that same area, but, in a cent-wise fashion, being Bitcoin's at 23,000 approximately, but Phantom could possibly go down to 23 cents instead of 23,000. It's just, again, another kind of factor to point out. Like, just kind of weird how much everything just fluctuates together, which I suppose it's not really weird at the end of the day, given that Bitcoin is essentially supposed to become the overall fundamental store of value for a globally integrated society. But the resistance right now is lining up around 50 cents. That's also lining up with the 200 estimating moving average. So breaking above that right now is to be looking out for. Then after that, I think we could we'll likely just come up to around $1.15 to around $1.30 or so. Also just generally lines up with this rough area right here. So I mean, at highest around $1, but $1.20 to around $2.30 would probably be the next range I could see it going to whenever that finally happens. Here for JASMY, I think overall things are still looking good. Obviously, zoom out, we've broken out of this this long-term resistance. We have seen a fairly volatile drop recently. I mean, we're still what I would consider fluctuating. I'm not calling this like in a textbook fashion, but just kind of like just can't draw on this chart. As you can see right here, we're just kind of in this a flag-esque type pattern. I mean, I think as long as we don't start to significantly lose 0.0035, which is just what generally lines up with our previous absolute low, nothing really to worry about. But if we start to push that again, I personally, and I'm not necessarily trying to give advice again, but I mean, I personally wouldn't be worrying about that. If you've looked into JASMY, I think it's got a lot of people that previously used to be associated with Solanier behind it. It's an IoT blockchain solution in terms of democratizing your data. Like, for example, when a website asks you for cookies or like something on your like TikTok, so just anything in general on your phone, whether it's your laptop, whatever, when it's something or somebody wants access to your data, you can now be paid to, you know, kind of like loan or lend or just give access in general of your data to somebody else, some other party, and you get paid some JASMY for it instead of, just basically Google knowing everything about you so they can cater to your, like how, like whenever, you and a friend or somebody, a family member, just, having a conversation about maybe some shoes you want to buy, and, like an hour later when you're scrolling on Twitter or you go to search something on Google, the very shoes, like quite literally the very shoes that you were talking about with this person about an hour ago is just magically popping up on your Google feed or your Twitter feed just because your phone's listening to you, which is very creepy at the end of the day, but I'm sure hopefully most of you are aware of it, but if you're not, well then, there you go. Now you know your phone's listening to you pretty much at all times. And then right now, I think it's pretty important to denote where the 200 estimated moving average is sitting at around 0.2.5 pennies. In general, I think that's just going to line up with the next, sorry, I can't draw on this chart. Around 2.5 pennies to around 4.5 pennies. And then afterwards on that, around 6.5 pennies to around 14 cents. Those are some areas I personally would be looking out for. Once we break that, then I'd say it's probably similar to Bitcoin going into its parabolic motion like I was mentioning earlier. Here for TRIAS, we've come down and we've met our median of these ascending trend lines that I've had drawn in here for many, many months at this point. Obviously, if we continue to go down lower here for Bitcoin, as long as we don't significantly start to lose $2.30, everything is overall, like I mentioned every single time in my recent videos, TRIAS has seen an upswing that's been a little bit, or I suppose a lot more drastic than many coins recently. So, this has got a lot of support, obviously, as you can clearly see back here, that it could come down and fall onto. So I don't personally think that there's really too much to worry about, but like I said, I would say watching out for $2.30, and then below that watching out for around $1.50 to around $1.90. And then breaking above around $4 is really the next thing to see. After we break that, moving towards around, let's say around $6, as high as, $9, $10 could likely be a next area where it could consolidate for a bit before it goes to any new all-time highs. If TRIAS is going to be one of those ones, at the end of the day, perhaps this is going to be one of the ones that, let's say it comes up right here, comes up here, and maybe it's just not going to make a new all-time high and it ends up coming down, and maybe this is be one of the coins that die. That really goes for every other altcoin I've mentioned beforehand as well. At the end of the day, no one knows what's going to happen. It's all just a massive gamble at the end of the day. And I think it's actually Multivac that I'm thinking about, but I've seen some people say that the team abandoned Multivac, and maybe I'm remembering that about TRIAS as well. I don't fully remember, but I just wanted to say that as well if anybody's in that in TRIAS. But here for the update on Dogecoin, as I mentioned in my previous video, I was kind of using this, if you look back here, what's currently drawn out with our yellow blob or highlight, and our yellow blob highlight right here. It's roughly where I see that we are at. And generally, it's obviously just what's lining up with Bitcoin with those final moments leading into the next parabolic movement, like I was going over about 45 minutes ago. So what I find interesting here is, let's say, like I've been mentioning, Bitcoin continues to go lower here. I think it's completely possible that we could see Dogecoin. We could actually see Dogecoin break this blue ascending support range going all the way back to June of last year. So it's a very long-term support range, around 9-10 months or so approximately. So if it does break that, that's not, really too good. But at the end of the day, as long as, if it does break it, I think it's not really too scary if we see a fake out, back down to test this rough 5 cent area, and then we break back above that same support zone as well. Although, I mean, like I mentioned for Phantom, I mean, we could see Dogecoin maybe come down a little bit more, you know, then move back up towards the end of May, you know, come back down towards around halfway into June, kind of make this overall kind of maybe like this micro double bottom right here, and then bounce up above the what I've been mentioning right now. It's important for descending resistance, breaking above 8.5 to 9 cents. And then afterwards on that, obviously breaking 12, 13, 14, 15 cents. I think that the next area likelihood is we'll move towards around 22, 21 cents to around 40 cents, and then sit there for a little bit, and then finally break towards $1, $2. Like I've mentioned, $1 to $5 is the conservative price target, but I don't think that there's really, especially, you know, obviously if it lines up with Bitcoin and Bitcoin goes high enough, Dogecoin can technically, in terms of the market value and things like, it can technically go to $25 to $28. That, as I've went over plenty of times in the past, that is just generally what adheres to, you know, the overall practical structure of the crypto market and what we would see leading up to that point. Again, that would take us to, like I said, I mean, it would look something roughly like this if I had to guess. Just, you know, like I said, roughly. It's not going to follow this pattern exactly, I don't believe, but I mean, this is not anything that I think is insanely, you know, out of pocket. A lot of people, obviously, you know, for good reasons, I mean, think that. I mean, at the end of the day, this is a meme coin, but I mean, it's also, I mean, it was, I mean, it would be a type of an ABCD pattern. I mean, it was one of the best movers last time around. I don't see any reason why it wouldn't be again. I mean, it's been a while since I've gone over it, but I mean, if you actually go back and you just take a look, you can see that this bear market back here is synonymous with this. We see this lightning bolt ABCD pattern right here. We see the first thrust, which lines up with this thrust back here. Now we see bear market, lines up with this bear market right here. So now we need to see the second and the final thrust towards the upside right here to carry on the pretty clear pattern formation going all the way back to what, 2013, 2014 for Dogecoin. This was the first coin that I got into, probably like many people that I recently got into the market. So it's kind of got a special place in my heart because of that reason. But here for CRU, we haven't broken out of our resistance just yet, the long-term resistance. Where as long as we continue to keep this box and we keep this descending, this dashed range, and this ascending white range that I have down here, I don't think everything's looking nothing's looking super bad for it. Obviously, if Bitcoin continues to go lower, it's completely viable and likely that we, you know, make a new low, and then we finally break out above it. Obviously, that's going to be scary to see if this is something that you're in. At the end of the day, it all just depends upon your risk tolerance, how valuable you think the utility case for this coin is. I don't personally know too much about it. I've looked into it, but I honestly literally don't remember what its use case is, because it's not something I've kept my eye on outside of going over it in my videos. But right now, looking out for obviously around 73 cents is important. And then breaking back above $1.15 to $1.30 will be a good milestone to see. That would then finally break it out of this long-term, as you can clearly see, this long-term resistance we've been seeing right here. Well, I mean, and also technically, because I recently drew this on here, this pink dotted trend line, you can see we broke out of it going down right here. You could see we had like a pseudo test right here, similar to that Ethereum retest that I mentioned earlier. If you wanted to count that, I mean, let's say like worst case scenario, this thing completely, for whatever reason, like just straight up tanks down to 18 cents. And then, could be, just as likely as well break straight back above the resistance that it's been facing here that I have drawn on the chart. But the 200 estimated moving average in general is lining up with our rough bubble of where we could likely find movement into next. So around $4 to $12. Pretty big range, but in general, that's kind of the range that I personally would be looking out for if this was something that I'm in. The previous high was $58, and it's a whole 89 cents right now. So, I mean, if this thing ends up making a new high, I mean, it's going to be currently where we roughly are right now. I mean, even if it just goes to the previous high, it's 6,000. I mean, let's say it goes to around $100, just roughly double. I mean, that's a 14,000% move. It's not bad at all. Here for Algorand, this is out of everything that I go over in my videos, I would probably have to say, outside of, CRU, probably the worst looking one. I don't say that in a bad way. I don't remember what this coin's utilization case is, but on here, what I believe we're seeing is we're basically seeing the type of double bottom that I point out fairly often. I think at this point, as we've already just actually, let's zoom in here. Haven't closed lower than our previous close back here just yet. We are getting currently we are getting a bullish divergence, although we really kind of need to see a few more candles close and open and continue to form to really kind of confirm, seeing this RSI kind of have a bounce up here. But overall, I mean, I would say, like I said earlier for one of the other altcoins, I mean, if this is something you trust in, if you think there's a good team behind it, if you think the use case is, worth your investing into it, then, I mean, don't let the fact that it looks like this and the fact that it's going lower than it did and a lot of these other coins aren't, make you think that this coin's going to be one of the ones that ends up dying. I mean, it just as likely very well could, but at the end of the day, I mean, it's a risk you have to take. It's quite literally the name of the game. I mean, the more risk you take, one, the more you can learn from it, and two, the bigger risk you take, the more risk, the more reward. So I mean that could be also kind of a potential upside to be looking for here as well. Whenever we do finally break this 16-month, so this long-term macro resistance that's sitting right now at around 20 cents, and then breaking back above 25, 28 cents into around 32 to 43 cents to look out for. That's lining up with the 200 estimated moving average right now. And then after that, I would say the next area, personally, if I were to be in here or in this coin around 74 to $1, 74 cents to $1, you can also just as likely get caught at around this rough area right here for perhaps a short period of time before a final blast off, if this coin does indeed set a new all-time high within the upcoming bull cycle. That seems rather likely. This final area that I drew is around $1.30 to $1.80. Here for MATIC, you can see that we're testing this support range going all the way back to September of last year. This is one of the ones that's had a more positive, more drastic upswing since setting its overall low back in June of last year, which that's not when Bitcoin did it. Bitcoin obviously set its first low in June, so I mean this one's MATIC's been behaving way better than everything else, and it did that beforehand as well within the MATIC's just been overall throughout my time being in the market seems to behave more bullishly than most of the things that I look at, which it has a very good use case behind it. I believe, and I think it's also just a very generally promising. I'm not in it myself, but I think it's very promising. I personally, I only own one thing. Perhaps I need to diversify a bit more, but I've kind of just shoved everything into one thing, kind of just because I see a vast amount of promise in what I have my money in. But anyways, right now, obviously, if we continue to go lower here, coming back down to this 16-month resistance, this would really be, outside of this area right here, which we just met it with a wick. that would be, if we come back down to this area right here at around like 75 to 60, so 75, 70 cents. I think it's no problem, no biggie whatsoever. If we come down, we break this kind of shorter term support that we're on right now. If we come down and test that, I think it would honestly be a healthy thing. If anything, it would line up with finding. So if we go back here, we had resistance, resistance for a short period of time, and then we come right here and we flip it into support. So we have a diagonally descending, what has been resistance twice back here, flipped into a bullish support for what would be a final bottom. And just to kind of point out harmonic structure and price, so we're essentially seeing the same thing here. This is personally, whenever I look at it, this is how I see the overall harmonics of the price in a simplistic way forming over time. Looking out for an $1.17 to $1.30, and then $1.36 to $2 would be what I would personally be looking at if I was in the market, or in that coin specifically. Here for Digibyte, we are, I suppose, unfortunately, we are breaking this very long-term support range that I mentioned. We haven't actually met this lowest lows, but you can clearly see this is following a broad trend trajectory range in terms of support over going all the way back to 2014, 2015. This is also, it is right now, we are currently, as you can clearly see, retesting the macro, these approximately 16-month long bear market resistance we've been in. We could, like I've been mentioning for the previous coins, come back down. Maybe we're going to make a new low and then bounce back up again. Everything just goes back to how much faith you put into this project. Because, like I said, at the end of the day, one of my last videos, at the end of the day, the faith that you have, the faith that you consciously put into something is what generally determines the value of something. So that's obviously very important. This coin does seem to be kind of stagnating a little bit, in my opinion. Didn't set a new high going back here to 2021. Which, perhaps that means this coin is going to die off this time around. Maybe it goes up and it doesn't even set a new all-time high, and it starts the beginning of what would be a very slow kind of just flatlined right here, but then overall we just kind of take a dip off, something kind of like that. We just finally start to really solidify this overall negative trajectory towards the downside. I personally don't see it going really too much higher than the previous all-time high at around 18 cents. As far as I remember, last time I looked into this project, it's really kind of, and again, I may be wrong because I don't fully remember, but it could just be I think this coin is just really kind of meant to be kind of a currency, kind of a somewhat of a, quasi competitor to Bitcoin, which at the end of the day, that's not really a good thing. I feel like personally, if you're trying to compete with Bitcoin, you need to bring more to the table than what Bitcoin offers. Like I said, as far as I'm aware, this is just really kind of operating as some sort of form of a currency. But that was mostly, obviously, all that I wanted to go over in this video, is to quickly point out these boxes that I have right here. I would personally be looking out for nearly 2 cents, approximately 2 cents to 0.033, so around approximately 2 cents to approximately 3.5 pennies, and then after that, 4 cents up to 7 cents I'd be looking out for. Then obviously with the likelihood that we just kind of make some type of a double top, just topping out again once more at 18 cents. As you can clearly see that we were just continuing kind of, I mean, we've stayed in this same high range going all the way back to 2018. That's not necessarily insanely promising at the end of the day. But like I said, that was really all that I wanted to go over in this video. Hopefully you all enjoyed the content. Hopefully you were able to learn something. If you're new to the content and you stuck around this long, the hour and 20 minutes this video is, feel free to subscribe. Hopefully, you enjoyed the content like I said. Hopefully you learned something. All that being said, I hope you all have a blessed day.
Now, won't I see you forever, start to